John Pierpont Morgan back in 1912 to Congress. And I don't know what the question was, but his answer was quite simple. And that is, money is gold and the rest is credit. Now you might think that that was just an opinion of J.P. Morgan, but actually it is a legal fact. Money is gold and silver coin or bullion. That is money. Nothing else is money. It's as simple as that.
See, the purpose of the central bank or the Fed, they pump out fake money. The purpose of central banks like the Fed is to protect the banks, not you.
Would you expect credit spreads to start blowing out when that'll be a key signal that, okay, it's starting to get real here?
Yes. Interest rates are a lagging indicator. As you get closer to recession, who figures it out first? Well, the Fed figures it out last. They're usually the last to know. Wall Street is second last to know. The people who figure it out first are actual business people, entrepreneurs, restaurant owners, dry cleaners, taxi drivers. Inventories are sky high and new orders are being slashed. You're not moving anything by truck. A lot of business people are living in the real world in real time. They know what's happening now. But as far as banking and credit is concerned, what happens is if you're a business person and you see business heading down, fewer customers, whatever, you go out and borrow all you can. You're like, hey, there's a really bad recession coming. if I got lines of credit, I'm going to use them up now. I don't want my bank changing the terms. And that creates a demand for funds and interest rates go up. And then the recession hits and the bankers go, what's going on? Credit losses start going up. And then they just turn off the spigots and they raise standards. They stop doing loans. Interest rates peak after the recession has already begun. In other words, if the Fed cuts rates, it's not because they engineered a soft landing. It's because they screwed up as usual, as they've been doing since 1913. They over-tightened. They didn't look at the forward indicators I described, and they found out too late. And then they got to take the foot off the brake, if you will, in terms of rate hikes, and then pivot. So there may be a pivot, but not because of Goldilocks, but because it's not a soft landing, it's a crash landing. And so I agree with the market that we're going to get a pivot, but I completely disagree. In my fairy tale, Little Red Riding Hood gets eaten by the wolf.
That all seems pretty scary. However, this is going to happen, and you can only play the hand that you're dealt. But the great news is that gold and silver always end up doing an accounting of the expansion of the currency supplies. Eventually it comes back in inflation. People sense the loss of their purchasing power. They rush back to gold and silver and they bid the value of the gold and silver up in the country until it meets or exceeds the value of all the currency in circulation. This is a process that's been going on over and over again throughout history, except this time it's happening on a global scale. It has never before happened in all countries at once. And that means that this is the greatest wealth transfer in history. Therefore, it's the greatest opportunity in history, and it's not going to happen again in your lifetime.
Gold's track record is clear, and so is the US dollar's. Fiat currencies have come and gone, but all the while, gold and precious metals have stood the test of time. Get started protecting your retirement savings today. See the links in the video description to get access to the free gold investment guides from the best gold IRA and gold investment companies that we have personally researched and vetted. You have nothing to lose, but you have wealth to keep. Thank you for watching.